mode.
Okay. And so right here, you'll see, if you ask to raise your hand, it'll pop up the list
Okay.
right in this section.
So this will be in NAR. So in NAR, we'll have to show, come here, NAR. So on the webinar.
When you ask, like you'll say, hey, so everyone, we're about to begin, it'll actually pop up in here when they raise their hand.
Mm-hmm.
And so it'll list alphabetically who all. So, and
Like
it's, we use
questions or?
Yeah.
questions or just if they're actually online and connected. And so we'll usually do that and just say like, oh, we see you such and such, like, thank you. Cause I don't know how many, there may only be, what, 2 or 3?
I think there's
online?
only like 3 on the webcast.
Yeah.
So if they have a question there, maybe you can just raise your hand so that we know.
Yep, questions will come in down here.
And then that way we could say, oh, we have a question.
Mhm.
Oh, it will be right here, so I can just click and it'll. Okay.
Yep, it'll pop up and
Okay,
so yeah,
great.
depending upon like when you want to open it up for questions. and things
Okay,
like
but
that.
it will pop up here and then
Well,
all I
this
have
will
to do.
show like just basically, this is more of like who's in attendance.
Mhm,
So,
mhm.
you know, when you start, you can ask, like we typically will ask, you know, whatever, if you're on and connected, will you go ahead and raise your hand and they'll see it so we can see you.
Mhm.
And so that's where
Okay.
it'll show, but then the questions will come down there.
Okay, but it will be visible for me that there's a
Mhm.
question,
Yep.
right? Okay.
Yep. I'm pretty sure it'll light up if I remember correctly,
Okay.
but we can leave it like that
Mhm.
too. So and then whenever it's not, I'll go ahead and do this. So it's just kind of out of the way.
Oh, yeah.
Just put it right there, but it's just a toggle back and forth.
Gotcha.
But it's recording now, so we can edit it from here and chop off the first 30 minutes.
Do we have to do something just to turn them on, not in listen only?
Nope, they're already on, not listed, they're automatically default, or not in Audible, so they can't speak.
No, but can they hear us already?
Yes, they can already hear you. We can mute right now if you want.
There's no one there, right?
Mm-mm.
Yeah.
Do you want to mute right now? We can do that. This is just the mute right here. We'll go ahead and do that.
Yeah, so he tries to download it. But we want to stay up here and then go pee.
In case of,
In case of-
well, anyway, it's recorded, right?
Yep.
So it doesn't matter when it's on there.
Exactly. I just gotta remember that there may be such a comment. But, yeah, so that way, you know, as the one wants. Some people come in. Hard to tell at the building.
So,
What? We have one person, but I'm trying to figure out why I'm not
You can probably unmute it.
muted. But
You know how to unmute?
yeah, it is unmuted, but I'm trying to find where is mine.
When you just did that, it came up. It's probably because the presentation is there. How is that going to happen though? Oh boy.
The main reason I need to open
When
up
you
the
do that, I
questions.
think I've seen it on the screen. Okay. It's right there.
Oh, here I go.
It's because there's two screens, so it's probably you have to.
Oh, gotcha.
Yeah.
It is unmuted.
We're unmuted,
Mhm.
and we have an attendee. Great. And it's from Elliott Davis.
Yeah.
Yeah.
Oh.
It's someone at Elliott Davis. Leah Vincent. Is that? She's like, Sweet. Yeah, I think we can get started.
A few straggles. Good morning, everybody. Everybody here for QuickBooks?
yes.
Cool, crikey, that would have been a pack. My name's Justin Hudd. I'm with SCORE, and I'm very happy that we're having our host STRA today with this wonderful facility, and Elliott Davis have joined us, who are the experts in all this stuff. And this is the first of a couple of seminars we're doing on QuickBooks. First one to get you started, the second one a bit more advanced in a couple of weeks' time. And Janelle will go through that in a bit more detail. Do we have people? We've got two. So we have some people, we're streaming this as well, so we're doing a webinar. So people who are online, can you do a wave online so we know that you can hear us? You can look at that one. Oh, was that it?
No. Yes.
We'll work on that separately. Anyway, so who's familiar with SCORE? Who has a SCORE mentor? Right, opportunity here. So SCORE is a not-for-profit organization that provides mentoring, coaching services, no charge. And we also do workshops such as Quickbooks. So if you have any aspect of your business that you think you might need some help with, reach out to SCORE. So it's score.org. Sign up for a mentor. There's a network of about 11,000 people across the US. Locally in Charleston, we have about 70 odd people, and these are people who've run small businesses, big businesses, a whole wealth of experience, and they provide their time at no charge to all of you guys. So it's why wouldn't you do it? I'm going to pass over to Janelle, and she'll be leading the session along with Nick.
I'm there.
Good morning. So we're going to wake you up this morning. We're going to make this much more interactive, and we're going to be welcoming questions as we go along. So if you come up with anything while we're going along, please just raise your hand. But I'm Janelle Fox, and I'm with Elliott Davis. Elliott Davis is a regional firm here in the Southeast. There's about 800 employees. We've got 8 offices, and we do everything from bookkeeping all the way to strategy and tax and audit, a full service firm. So I've been with the firm now 3 years, and prior to Elliott Davis, I owned my own accounting firm in Pennsylvania and did business advisory and sold that firm and moved here to very hot, sunny Charleston. Now I'm questioning why, but it's been a nice couple of days. And so now I've been with Elliott Davis doing the same thing, accounting and business advisory for the last 3 years. And so my colleagues, Nick, Annan, and Anar, came with me to do the presentation as well, and I'll let them introduce yourselves. Go ahead, Nick, you want to?
Yeah, my name is Nick Annan. I've been with the firm now about 2 years. I started my career at a small firm doing audit and tax work, and really wanted to get into a more consultative capacity, a more business advisory capacity, and that was the genesis for me joining Elliott Davis a couple years ago. So I'm a senior manager and the team leader for our Columbia office. So I lead that market and that practice, and but we practice what we call one firm, and that's why the 3 of us are standing here. We frequently work cross offices to make sure we have the best team in place for our clients.
Hi, my name is Anar De Nicola, and I work here in Charleston with Janelle and her team. I'm a senior, and I actually just hit my 1-year anniversary a few days ago. Yay!
Awesome. So Nick's going to start us off with the part 1 of our conversation or talk today, and then I'll pick up on part 2. So like I said, ask questions. Feel free to just raise your hand. We're happy to answer any questions.
Yeah, absolutely. This will be best if interactive and y'all ask questions and get out of this what you need to hear. And same things with those online. If you got a question, just shoot it through the chat box and we'll make sure we get it answered. So you saw the disclaimer there. That's to say that nothing we say is meant to be advice necessarily, and you should make sure you consult someone before acting upon anything. So, all right, so kicking off here, we wanted to first start talk about managing your business finances and kind of the basics with accounting and what that entails. So we'll talk through just a basic introduction to what accounting is, as well as some of the basics. So making sure you have the proper chart of accounts set up, what that daily accounting really looks like, your responsibilities there, and then how you make decisions based on that data. So that's really important. Okay. Go ahead and move me forward. All right, so what is accounting? Accounting is the systematic and comprehensive recording of financial transactions. So that's getting all your information into your system in an organized fashion and having support for all those documents. So it's a whole framework, it's a whole system, and something that you need to keep up with regularly in order to run your business properly. So it allows you to run your business, to accurately record what's going on, and to generate reports so that you can make a decision to move yourself forward. So along with accounting, I also wanted to talk about the definition of an accountant. So an accountant, there's an accounting system, and we'll talk a little bit more about, specifically obviously QuickBooks online today. There's another online system called Xero, which was started in the UK. And the owner of that, the co-founder of that system, he's petitioning Webster's dictionary right now because he wants to change the definition of accounting. So if you look right now in the dictionary, you'll see accountant is a person whose job is to keep or inspect financial accounts. So just on a basic level, it just sounds very compliance oriented, right? Just do that. So he believes that the nature of accounting is really changing. So he actually is petitioning to add and advise on financial accounts. So adding that next layer of, okay, these numbers are here, but what do they really mean? And I'd wager to say if any of you are accountants or have worked with an accountant, your definition might be a person who solves a problem you didn't know you had in a way you don't understand. So we accountants, we have a way to be able to turn 2 + 2 into 5 is another joke. All right, great. So I want to start off first by talking about the chart of accounts. And this is really one of the foundational pieces of your accounting. If we don't have this step right, it's going to be really challenging to get the information out on the backside for your decision making. So you've heard the phrase garbage in, garbage out. So your chart of accounts, this is just a list of accounts where you make your categorizations happen for your income, your expenses, your liabilities. And we've pictorially illustrated, what that kind of looks like, right? So you've got your income bucket, expenses, and so forth. And within that, you have, some additional information after that. So it's important that your chart be robust, yet simple. So you want to get, enough detail out of it on a level that you can make a decision, but you don't want to be so detailed that it's just voluminous and really hard to read. So I always say I like to follow the KISS method, right? So keep it simple, stupid. And that's really the best way to go. So your income statement accounts, those will tell you, the income will tell you, what you're bringing in. So the categorizations there, they may be what you're selling, product or service. You may have a little bit of detail there in terms of a little bit of a categorization breakout. You may have some other income as well, which actually doesn't fit with your operations. That'd be other income. Could be interest or investment earnings, that kind of thing. So next, your expenses account. How much are you spending? Your rent, utilities, your cost of goods. And so those get categorized in that section. So when you net those two together, you get your net income or your net loss. So that's kind of the result of all this. The last three categorizations, these happen on your balance sheet. And these are your assets. So these are the things that you own. Could be your cash, could be your receivables. If you have inventory, so you're selling something, you might have that on your balance sheet. So these are the things that in some level can be converted to cash, and you can liquidate those. Next, you've got your liabilities, right? So if you've got payables, loans, all credit cards, these all fall in there. Okay? You net those out, and that's your equity. So similar to you as a person, you've got your net worth. This is your equity section. So if you net at the end of the day all the things that you own and all the things that you owe, that's what you get to your business worth. Any questions around the chart of accounts or how that structure works?
Liabilities and expenses, it seems like there's an awful gray area in there as to what would qualify as a liability and what would qualify as an expense.
Yeah, so we'll get a little bit more into where those fall in terms of the financial statements. I think that'll help a little bit. So your expenses, when you have not paid your expenses yet, they are liabilities, right? So if you think about, you swipe your credit card, and so you owe Visa or American Express $10 for the lunch you bought, but that $10 is an expense.
Okay.
Yeah. And so that's where the owed versus owning comes into play, right? Like once you pay that bill off, you've lowered your cash, but now you don't owe credit card bill anymore. Yeah. Okay. The one last thing I'd like to highlight about the chart of accounts and going back to the keep it simple method and not being too overly verbose with it is to make sure, especially when we get to QuickBooks Online, we'll talk about this, utilizing class structures, locations, things that can build out your chart. So if you need some additional information, you can get it. But as you look at a basic profit and loss or balance sheet, it's not gonna build out too far. So as an example, say you have 3 or 4 locations. Now a lot of times people they'll break those out into 3 or 4 separate accounts. Well, really, you can have one rent account and then use locations or classes to classify what location that's for. And that way, if you really need to see, okay, what a Somerville cost me versus downtown Charleston, it's easy to break that out. So. Good. Cool. All right, so you've set up your chart of accounts now, and now it's time to start making your daily or monthly accounting entry. So really important that this is kept up to date on a regular basis. So first, to capture your money coming in, you'll need to record your sales. So a lot of times you may be writing invoices for this, and it'll be recorded in your financial statements in that way. So you're sending invoices to your customers. Ultimately, they pay you, and you receive their payment, and then you can make your deposit. So going back to expense versus liability, income versus assets. So you invoice your customer, they haven't paid you yet. Now you have a receivable, and you have your income. And then once they pay you, that receivable actually turns into cash. So that's how that goes forward. Then obviously you have to pay your vendors, and you have to keep your business moving forward. You have expenses related to that. So you're entering your bills at that point. You've got vendor bills that you're entering in their invoices, and those sit and create your payables. So then, whatever your regular time frame is for paying your bills, maybe it's every week, every 2 weeks, you go in there and you actually, you write your check perhaps. Obviously, the other way is credit card transactions. And then you've got your payroll. So one thing I really want to highlight when it comes to QuickBooks Online, we'll talk again in great detail, is utilizing the efficiency features that are in that system for you. So Janelle will cover what are called bank feeds. And this is essentially, if you use any kind of online banking, maybe use this in your personal life. If you use a system like Mint, it'll actually bring in transactions for you, so you can cut down on your manual entry. So that can be very helpful and time saving. So next, I really want to underscore the importance of reconciling your accounts. First getting your transactions in there regularly, and then reconciling regularly. So depending on how many transactions you've got in your business, that could be daily recording, it could be weekly. But just really important that you don't get too far behind that it becomes this huge ordeal to try to get your information into your system. And then next, once your month closes, once you've got all the information in there within a week or two, you really got to reconcile your major accounts, your cash, your loans, credit cards, those kind of things. Not only from just the fraud perspective, right? So looking at your credit card statement and saying, oh, did I spend that at whatever the store is in India? No, I haven't been to India lately. So there's a problem there. But just making sure that everything there is yours and that it's recorded in your system. So, all right, let's see here. What is next? Cool. Moving on. Cool. All right. So you've gotten all your information into the system, and now it's time to look at your statements to see how your business has performed. So admittedly, accounting historically is a historic science and art, really. So we're looking at things that happened in the weeks and months past. And but what's really important as you look at these is starting to identify the performance indicators that you can understand that are driving your business forward. So you understand the inputs into that, you can affect those and thereby drive your business forward. So we've got first, really I want to start with the balance sheet. So the balance sheet, that's where you've got, that's I like to think of it as your snapshot, right? So you remember as a kid, you get ready for your school picture, right? And so you get all dressed up, you get your hair cut, and you get yourself looking really nice for this one point in time. And that's your balance sheet. So your balance sheet is a snapshot of this one moment and what your company looks like. So it'll show you, again, the things that you own, your cash, your property, and you'll net out the things that you owe. All come down to your equity at any given time. So really important to monitor that. And what's important is not, looking at it at 1 point or even 2 points, because 2 points don't tell you a trend, but monitoring it over a period of time, right? How is it done over the last 12 months? Trailing 12 is a really great way to look at your statements, or even over years. But looking at multiple time frames so you can see trends and see what's going on. All right, so we'll talk about the income statement next. And again, something that's really important to look at on a regular basis. This is summarizing your activities in terms of income, in terms of expense, and seeing what happened there. So that is basically, if you think about 2 of your snapshots, right? So you took your picture at the end of, you took your Christmas picture last year, you take your Christmas picture this year, right? So you got your 2 snapshots. And then the period of time in between that is your profit and loss and what happens in that time frame. So again, an important thing to look at. A lot of times a business owner will say, they'll see the net income line and say, well, where's all that money? Right? You look at your net income, you've got it's a positive number, but I don't have any cash to pay. Like, where's that money at? And that's why the cash flow statement is so important. And admittedly, as accountants, this statement in accounting school, if it gets covered, usually gets covered in like the last 2 weeks of a semester. But arguably, it's probably one of the most important statements that you have to look at. So this will boil down, we'll start with your net income, and it'll boil down from there what happened in terms of your cash. There's actually 3 sections, an operating section, an investing section, and a financing section. So if you can imagine starting with your net income, what you made, and the operating section will be just that. So think about the things that are happening in your business. You've got your accounts receivable, your accounts payable, and how have those changed, right? So, maybe you sold a whole bunch of product or service this year, but no one's paid you yet. Okay, so that's gonna take off of your net income because you didn't actually receive that cash. And so those are things that'll happen in that operating section. When you get down to the investing section, that's money that you put back into your company. So you might have fixed assets that you pay for or sold, things like that. And then the last section being the financing section. So if you put money into your business or you've taken money out of your business, paid dividends, you've gotten a loan disbursement, those kind of things would show up in there. So those 3 sections really break down for you, okay, where did my cash go? And help you a little bit better understand, what's going on. So any questions about the statements or the daily financial accounting? I know the cash flow, and again, why it's taught so late in accounting school, it's kind of a scary statement for a lot of people. It's something that a lot of people don't understand, but if you really take some time to see yours and see what's going on, I think you'll find that it's a really powerful tool for understanding, what's going on. You can grow your revenue all day long. You can sell more products. At the end of the day, if no one pays you, you'll grow bankrupt. So just a really important thing to watch your cash flow and to stay on top of your customers and vendors and collect all that. So, all right. Well, if there's no questions on that section.
Questions?
Oh,
Nope.
Nope. All right. Well, let's move into some QuickBooks Online then.
Okay.
No more boring accounting.
We'll try to make it. All right, so I like to get to know my audience. So how many people here own a business? Okay, great. And so the remainder, do you guys work as bookkeepers or do you have like a side hustle? What is it that's brought you here? Some examples. Working in a, you both do both? Okay, great, fantastic. So today what I'm gonna do is I'm gonna focus on an example, a sample company. It's a landscaping company. And what we're gonna do is take everything that Nick just said and we're gonna do it real world in QuickBooks. And we're gonna just do the entries. And as we go along, if you guys think of any questions or you're thinking about your own business or your own daily accounting, if you come up with questions, let me know and I can help you. So we're gonna talk today about setting up a QuickBooks Online and then how we do it, how you can customize it. I'm gonna show you how to look at the chart of accounts a little bit deeper, as Nick was talking about. And then we're gonna go into that money in, money out transaction and training. So we're gonna show you how to, do invoices, receive in those payments, make the deposits, reconcile your bank accounts, your credit cards, and then pay your vendors. So we're gonna go through all those things.
I do have a question. So I have, as a bookkeeper, I have this company where she has like a lot of transactions that's coming in.
Yep.
Because I'm new to her, I'm trying to sync them all
Okay.
into QuickBooks, and I'm trying to figure out which app would be best because now I have to pay more.
Okay.
She has like a lot of transactions.
Okay. So for the people on the webinar, our question was about choosing an app to sync in. And I'm actually going to be covering how to do the syncing in today for the bank feeds and the credit card. And there's also probably a conversation we could have offline about how to bring in only certain number of transactions from a certain time period too. Yes.
What determines whether you should have an online or desktop?
Okay, I will cover that as well. All right, so let's go ahead and start getting into it. And so what are the benefits of QuickBooks Online and what are the benefits of QuickBooks Desktop? So QuickBooks Desktop has been the number one basically software that's been used for a long time. There's Xero, there's a couple other smaller ones, but then there's some really big ones, which generally 95% of the time we're seeing QuickBooks being used. Desktop is generally only accessible on one computer unless you put it onto a server. And desktop is actually, Intuit's putting less money into the development of desktop because everybody wants their QuickBooks on the go and they want people to be able to access it anywhere. So desktop is really good for inventory. When people have inventory, it's a little bit better. And a lot of times it's for cost. So we have clients who have, say, 20 entities and 20 QuickBooks files. It's going to be much cheaper for them to have one desktop license that they can have multiple entities with versus having 20 monthly payments for QuickBooks Online. So there's some benefits to desktop, but what we're seeing is that Intuit's putting so much money into QuickBooks Online that a lot of those things are starting to not be a problem anymore because they have so many apps that will help you with, a CRM system and an inventory system and syncing up your bank feeds. There's so many things that work with QuickBooks Online that all the problems of desktop versus online are really starting to go away. So QuickBooks Online, what's really great is, like I said, anybody can access it. It's in the cloud. If you have a really large business and a lot of transactions, they've actually even made an advanced version of QuickBooks now, which we can talk a little bit more about. And it really gives you some good dashboards. It gives you good reporting. It's actually become, even our firm, there's like I said, 800 employees. We're actually moving all of our clients possible onto QuickBooks Online because it's really just the way of the future now. So there's some options for QuickBooks Online. So the simple start is really if you're just getting started. You're not doing too much. You're just trying to keep track of what's happening with your cash. That would be the way to start. It's the cheapest option, but you're always able to upgrade as I go along. So if you think that maybe version, the essential version is the good one to have for now, if you grow and you need to add things, you can always change to a different version. So the one we see that happens the most is Essentials and Plus. So you'll see a list here, and you can see this right online as well, but you can see that you can actually manage your bills. You can have more than one user log into your account. That's a big deal for businesses. And then on the plus side, you can move up to the 5 users and also track inventory and do 1099. So that's the biggest difference between the two. But those are the Essentials and Plus are the most popular, and it's usually because you need more than one person in it, I would say. And then the advanced version, they actually just came out with this one recently, but this can have 25 users. And now there's this really cool dashboarding tool that they have. It's called Fathom. And basically it lays over your QuickBooks Online and you can choose KPIs. And I don't know if you guys know KPIs, key performance indicators. But what that is it's giving you good percentages and analysis that you can use, that you can just add a moment's notice, say, what was my revenue growth over the last couple of periods? Or how's my inventory turning over? Is it turning over a couple of times a month or is it turning over 10 times a month? And so when you get the advanced version, you get this Fathom layover, and you can choose how to analyze your QuickBooks in a moment's notice. It just will pull it up. So you can choose, I mean, I think there's like 50 options of KPIs that you can choose and monitor.
Just pre-programmed.
Yeah, and you can just literally check which ones you want to see, and it'll give you a dashboard of that.
Yeah. The other thing that's really powerful about it and why QuickBooks Online is so helpful is actually real time with online. There's a real time sync. So as soon as you have a transaction, it'll affect the ratios and the indicators that you're trying to follow.
Yep, it's really great. So that's the biggest thing with advanced right now. Okay, so once you get into QuickBooks, I'm going to actually have Bernard go right into QuickBooks and kind of walk you through customizing. So when you're going into QuickBooks Online, you're just setting up your account. There's a lot of options within the company that you're able to customize so that you can use different advanced options within your QuickBooks. So you just got to go to, my login went out, so excuse me one second. Hopefully I remember my password. It's thinking. Why is that not going?
Oh, here we go.
And why is it not on the screen?
Thank you, sir.
Go ahead, you can do it. But that's not. Okay. Okay. Technical difficulties.
Help.
We're accountants, we're not IT people.
I'm trying to put it on the screen.
We gotta
Yes.
do how do you do a different screen? Does anyone know?
Maybe end the presentation.
No, it was just linking for us.
So sharing,
Yeah.
sharing. Trying what?
Did it change? No. Sorry, guys. Oh, here we go. Let's do.
Ah, there you go.
No,
What did you go on to just?
but this is just the webcast part. This is not.
This is not like a second screen. Is it?
Yeah. Oh, here we go. No. Move this window away from the shared screen. Sorry, guys.
Sharing screen's paused. There's water here if anyone wants any, by the way.
There
There
you
we
go.
I just closed it. We don't need the PowerPoint. Okay. Sorry, guys. Thanks for your attention. Okay. So the way to access the advanced settings in QuickBooks Online is you're going to go right up to this gear up here. And this is going to be where all of your options are, but accountant settings is going to be on the left-hand side. So once you get into there, there's a few different options. There's going to be setting up your company, your sales, your expenses, and some advanced things. So if we look just at the company tab, this is going to be your basic information. And this is going to affect what shows up on your invoicing, a whole gamut of things. But essentially putting your company name, your EIN, or your social security number, what type of industry you are, which is helpful because choosing your industry when you're first setting up will actually help to determine what your chart of accounts is, like a standard chart of accounts for your industry. So that'll be helpful. And then just your company information, your address, and if you scroll down just a little bit, you're able to choose your tax form, and then, okay, is that it? All right. So that would really help. So on your invoicing, it'll show all of your information. And you'd be able to access your EIN number, which is always hard to find. So once you get it in QuickBooks, you can always go in and find it quickly. Okay, so we'll go to the sales tab. So the sales tab is how do you invoice? What are the terms you provide to your customers? Do you offer a discount? Do you do tips? What types of products and services do you have? Do you do progress invoicing? Do we track inventory? So those are all the questions that you would go through to answer about your business so that it knows exactly what features it needs to turn on for you. When you go to the expense tab, you go there, please. This is just gonna be, do we bill out our expenses? So let's say that we go to, as a landscaping company, we go and buy a palm tree. And so the vendor, palm tree, company sends us an invoice, and if we have 2 palm trees, are we gonna bill those palm trees to a client? So we would say that we mark it as billable so that we can add it to their invoice. Purchase orders, we'll get a little bit more into that, but purchase orders are when you, a lot of times they'll go to multiple vendors and say, quote me 2 palm trees. And so within that, then the vendor will say, the 2 palm trees will be $200. And so they would set up a purchase order to track if we've received that inventory in. And then on the advanced tab, this has got a little bit more information. So do you operate on a fiscal or calendar year? Do you use cash or accrual basis? Is everybody familiar with the difference between the two? Okay, so cash basis is when you actually receive money and when you actually pay the money. Accrual basis is when you invoice somebody and you get a bill. So accrual basis is a lot more intuitive because you're really able to see how your business is doing, not just by cash. So accrual basis is a lot of times what we really use to make decisions. Cash basis is really just what happens with the cash movement, okay?
So the accrual basis is built on what we call the matching principle.
Mhm.
So if you've got a job you're working on this landscape, and your customer has signed a contract for you to do this landscaping, and you're going to do it, at the end of December. Okay, so you've done your work in December, they owe you in December. So on an accrual basis, you would record that as revenue. Maybe they don't pay you till January. So on a cash basis statement, that income would not show up in December, it would show up in January. So that's kind of the difference there.
Yep, yeah, so the true profitability is when you got the bill for the palm tree and you didn't get the money yet, you want to see if revenue was X amount of dollars and the palm tree cost was this much, what was my true profit? Because if it's in December, not in December and January, your true profitability wouldn't show up on a cash basis. So.
What fiscal year and calendar year?
Great, so there are times that even like businesses that have seasonality or some reasons that they can do not just from January to December for their tax year, they can do maybe from July 1st to June 30th. So you can put in there that if you have a different year versus just a typical January to December. A lot of times we see that in like nonprofits and things of that nature. Yeah. Sure, yes. If anyone has any questions online, I'm forgetting that there's people online. Please just raise your hand, let us know. Does anybody have any questions on what I've covered so far? Any questions on?
No.
No? Okay, great. And so just to continue on, let's get down and look at the chart of accounts. So as Nick had covered, the chart of accounts is like the basis for your accounting. This is the way that the chart of accounts is generally set up in Quickbooks Online is just like a typical standard account. But it really, if you set it up correctly, it can give you a wealth of information. Specifically, cost of goods sold. Like a lot of times what we'll see in smaller businesses is they'll have income, and then they'll have an alphabetical order of expenses. Advertising, bank fees, charitable contributions, things of that nature, and it just goes down. That doesn't really tell you too much. But when you set up your chart of accounts and it says landscaping income, and then below that it says direct labor costs, and it says material specific to the job. Now we can see what is the true cost and gross margin of that job. So are we billing our customers right? And are we covering our overhead costs, which is our rent and our salaries and our admin and things of that nature, which all would go below that. So setting up the chart of accounts correctly is very, very important. And then there's other options within that where you can go in and you can put standard numbers to your chart of accounts so that you would be able to just choose it by a standard number. That's an option. And then what else is showing on the settings? Go back to that.
For lists.
Yeah. Nope, accountant settings, please. So make sure I cover everything in here in the advanced section. Yep. So so chart of accounts, like I said, is really, really important. And I'll go into the other screen that Anar was in here in a second. But I did want to just cover the classes and locations option because Nick already touched on that. So classes and locations, as Nick said, is a secondary part to your chart of accounts. So if you're saying you have, revenue and direct labor and all those things, now imagine if your class of business actually had a landscaping business that had lawn care, which was mowing, and then they had massive landscape design, which was like the whole, thing that you want, which is like a beautiful backyard. And then they would have irrigation systems, and then they would have, geez, what's it called when they spray your yard? I don't know. I'm not a landscaper.
Fertilizer?
So, what's it?
Fertilizer?
Thank you. So they would have all these different classes of business. And in QuickBooks, what they did is they chose those classes. So if they had materials that was specific for the fertilizing, they would put the cost under that class of business. If they billed a customer for that, they would put the revenue under that class of business. So what was really cool is that after a time period, they said, I don't think that the lawn mowing is really making us much money. Because when we pull up the income statement by class, it's not showing us that we're putting a lot of money into it and it looks like our revenue is really high, but our profit is not good at all. And so they were able to make the decision, do we want to sell that part of the business? Because now we can show them how profitable it was or the type of revenue. Or do we want to just not do that work at all anymore because it's wasting our time? Or do we need to charge more? That's the third option, right? And so using those classes is really helpful in that scenario. So you're able to really make some bigger decisions versus just having that vertical income statement that's not going to give you that info. Do you guys have questions on that?
I do. So over time, as your business grows, things are going to be changing. So your chart of accounts, this is why I'm here, because that's what I'm experiencing right now. Things are changing. So when you change it, how does that affect the whole picture?
Yeah. So a lot of times, like, let's just say you're adding classes now, or you're doing, a lot of times it's not gonna, unless you go back and do a reclass of the historical information, it's really gonna start from when you make the changes. Yeah, so, we've seen it before where clients will come in and they're a disaster and their chart of accounts has been a vertical chart of accounts. And we say, this is what we really need to do to get information. We really need to get some classes of business in here. We need to see, budget to actuals, we need to see all those things. And we're really basing it off of, let's start getting information now for this quarter. We're not gonna have too much to see from historical and how the trends have been, but next year, we're gonna have all that information. So you're not gonna be able to do too much comparison once you start really getting a fully developed accounting system, but something is better than nothing. All right. Okay, so I think we're good. Is there any more questions on anything with the advanced settings? Okay, great. If anybody raised their hand, let me know. So now we're going to go into this list section, which is also under the gear. And you're already in there. Yep. So the chart of accounts, I will have Anar go ahead and just click on that so we can just walk through that really briefly, and then I'm going to shut up about chart of accounts. Because there is some really good stuff here. So as you can see in QuickBooks Online, it actually will go down and show you all of your accounts typically by assets, then all your liabilities, then all your equity accounts, all your revenue, then all your expenses. So go ahead and scroll down, and it gives you a real-time QuickBooks balance as well. And it also will allow you to go in, and you don't have to do that, but go in and view the register, the ledger of things that have happened within those accounts. So this is where you would go in and you can actually make changes to it. So if there's something in there that wasn't in your standard or chart of accounts that you feel would be useful, or as things are happening in your business, you're like, none of the categories fit what happened for this. You can go in and you can add a chart of account, you can add another account to it. And it'll ask you things like, what type of account is it? Is it an asset? Is it an expense? What do you want to name it? Where should it show up on your cash flow statement? It'll ask you those things in the setup. All right, you can go back into the list, please. Okay, so recurring transactions, which I will show you when we get into a couple of transactions, which I promise we're going to be doing here in a second. The recurring transactions is, let's say that every single month your rent is $1,000. Well, every single month, instead of entering the bill for $1,000, QuickBooks allows you just to memorize it, and it automatically shows up for you. So those are really good for those standard fixed costs that are the same. And then there's also the invoice side. So let's say you have an invoice for somebody that's lawn mowing, and it's always $100 a month. It can generate those invoices and memorize that and create them automatically. It can even email your customers automatically with their invoice. So, so recurring transactions is really, really helpful. Products and services, this I'll touch on. It's gonna definitely be touched on a lot more in part 2. But products and services is like the breakdown of exactly what you're doing. So you're gonna have, say, a revenue line, but within there you can have products and services like lawn care items, or you can have landscaping item, you can have, I'm just trying to think, palm trees, all the different types of inventory that you keep, mulch, things like that. That would be where you set those things up and use them on your invoicing. And locations we touched on, they're very similar to classes. If you have multiple locations, you can use that and see profitability by location. And payment methods, that's just how you accept payment from your customer. So cash, credit card, ACH, things of that nature. Terms is just the terms that you have both for your customers, so how quickly do they pay you, and then your vendors, how quickly do you have to pay them. And classes we already touched on. Does anyone have questions on that?
Does QuickBooks have any predefined chart accounts for the businesses?
Yes, so when you go in and you choose your industry, it will give you like a standard chart of accounts. So if you went into and you put in manufacturing, it's not gonna give you like a real estate chart of accounts. It's gonna go in and say typical manufacturing chart of accounts and just automatically give you that once you choose your industry. That's a good question. So when you go in these, they're all highlighted blue. You can actually click into them under this area and change them. So you can add the terms and set the terms up. So like, let's say it's, 2% and it's 10, you can go in and set that up if you can get a discount from a vendor. You can go in and make your classes. So if you wanted it to be lawn care and landscaping and fertilization, you go in and those classes can be set up in that section. And once they're there, they're there.
Normally, when you set things up, do you normally go to your accountant and him help you like that? I mean, for me in the past, I've always gone and they've helped me set up my chart of accounts to make sure it wasn't a mess.
Yeah, I mean, that's a really great question. So we've seen both.
Yeah.
So it depends on your confidence level that you're choosing it, right? So a lot of times it's not a bad idea to say what would be good and kind of thinking it through. What would be good to have in my chart of accounts if you're not familiar with, the reviewing the financials and what that information would provide, and they can talk you through it. So like normally in those conversations, I would say, well, what are the facets of your business? Like, what would you want to see separately? Like, if you were ever to sell off a portion of your business, would it be by location of your business? Would it be by type of work you do? And so when you start to think through the math, I bet most people can say right off the bat what they thought that those classes would be. So it never hurts. It's always easier to ask your accountant before than it is to ask your accountant to clean it up after. Yeah. Yes.
Can you choose your industry?
You should be able to go ahead and click the gear. So the question is, how do you choose your industry? So we're gonna go into the accountant settings. And we should be able to go right there. Yep, click the pencil. And then in there, just click industry type. So just put manufacturing. And it should come up with some options. A lot of times this is based off of your, I think it's the SIC code, the NA.
The tax code?
Yeah, that goes on your tax return. And so what this is that code is basically saying, what are other companies in your same type of industry doing? And it's kind of a benchmarking tool, but that's how you would go in and just type it in and some options should come up. You just got to do your best, especially if you have like a niche business. There might not be a lot of you. I don't know what you'll do, but sometimes you got to just say, okay, maybe I fit into this category, and it'll get you pretty close to your target.
Unfortunately, QuickBooks has, when you go into that, company type. I mean, it wasn't just, manufacturing. There was actually a good number of kind of breakdowns from there, corrugated steel manufacturing and different other items. So it's not just, manufacturing.
Yep, exactly. Once you type manufacturing, then it says manufacturing this, manufacturing that, other, yeah. Okay, does that answer your question, sir?
Yes.
Great, okay. All right, so I think we covered the list. So, all right, let's get into actually doing some things. So once you've gotten your chart of account set up and now you're ready to enter transactions, one of the first things I always suggest is doing the bank feeds, because it's really going to be a lifesaver for you. Pretty much any bank or credit card at this point will sync to QuickBooks Online. And what's really great about that is back in the day, my kids would say that makes me old when they say that, but back in the day, you would take all the documents you had and one by one, you would enter them in as a bill or you'd enter them in as a check. We don't have to do that anymore because technology is so amazing. So in the banking section on the left, you'd be able to click that and it brings you up to this window here. And so they already have a few of them set up, but we'll go in and we can only take it to a certain point because we don't actually have a bank to log into. But if you click add an account, you're actually going to be able to search your bank or your credit card right in this window. And most have the access to sync over. If it does not, a lot of times what you can do is just log into your bank or credit card and you can just download to a QBO file and you can actually import the transactions in and get the same result. So most major banks have that connection, but you do have an option to go in and just do a download.
Yeah. And oftentimes you might need the download anyway, but the bank fee typically only goes 90 days back.
Yes.
Or so. So if you wanted to get, 12 months of activity, it won't catch all that. So if you go download that file for the other time period, you'll be able to just import that in.
Yeah, great. Thank you, Nick. And so it'll actually tell you right here to sign in your bank, and it'll say that you would download transactions. Those file types are the exact same file types you would get if you had to go into the bank to download different transactions. So all you would do is you'd go back in, you choose your bank, and then it gives you a sign-in window. So it's going to look just like it does when you sign in to go into your bank. And once you get in there, then a pop-up screen is going to come up, and it's going to say, do you want to download your transactions? And you can even choose like a time period. So with your question earlier, you could go and say, I only want to pull in from March because everything was entered prior to that, right? So you can choose the date and the point at which the transactions are being pulled. So that way it doesn't pull up as much history as the bank will allow. If it does though, you can fix it. You can just delete all the transactions you're not going to enter and ignore them.
The big one was easy. It was the square. She's a square.
Okay. Okay, yes, so we do some things with Square, so we can touch base on that after, yeah. Okay, so we'll just pretend for sake of presentation purposes that the bank feed's all pushed in. And so in our awesome sample company here, it shows us some transactions. So this is actually all the transactions in the memo that appear on your bank. So you're able to just go in. So just to make note, this is just like a holding place. None of this is in your financials yet. This is just a place where it says, let's see if they're in there. Let's see if we can match it to something that's already been entered. And if not, then that means you do have to code it and put it in. So we'll do a couple of examples. Now, like this one for example, Hicks Hardware, it says one record found, check number 75 for the exact same amount. What that's saying is you already went in and cut a check from QuickBooks. So when it saw it come through the bank, it's saying we're going to match it up because we don't want to enter it. So just tell us that yes, it's the same one, and we don't have to re-enter it. So all you would do is just hit match. It's not going to enter it again in your QuickBooks, but it's just going to say, okay, we know that it's in there. And so you're just going to go down and clear those one by one. So go ahead and just click match on that. It says edit or undo changes, transaction matched, done. The problem's been solved. It's out of the bank feed. Let's see, let's take one that is a deposit. The same scenario for this one. You already put in that you received money from a customer. And so from there it says, okay, we see that deposit coming in and we found a record. Do you want us to match it? Here's the thing you really got to be careful with on these deposits. Imagine if your business is always the same cost to everybody. Everybody has the same subscription cost. And so QuickBooks sees a deposit come in for $100 and you've got 20 customers that owe you $100. It's really, really important that you go in and say, because it might say 20 records found. You're gonna wanna go in and make sure and find other records and say, was this really the customer that paid me? Because it might just choose the default, the very first person that it sees that owed you $100, but it doesn't mean that's the person that actually paid you. And we see this a lot with like subscription companies or companies that charge the same price for everybody. We see that a lot. So you just have to be very careful with that. Technology is great, but it also still has to be monitored. So luckily that leaves us jobs still. Questions on that? Nope. Okay, great. So she just went ahead and matched that. So let's just scroll up to this A rental. So this just says uncategorized. We don't know what it is. We see that you paid someone from a rental, or maybe it was like a debit card transaction or an ACH. From there, you probably say, okay, we want to go ahead and set the vendor up that says that's a rental. So NAR's going to do that. This will create that vendor in your list of vendor names, and you wouldn't have to create a vendor again. So if you knew that you're always paying a rental, go ahead and set them up so that way you're able to keep utilizing them in your entries. The category, I don't know, probably rent expense or equipment rental, something like that. So you would go in and let's classify it. Let's make it show up on your income statement. So we know that we paid $1,200 for equipment rent. This is really great. So customer. Oh, I remember I rented that equipment to do, I don't know, Diego. Isn't Diego a customer in here? We'll put him in. Diego. What does this do when you put Diego in? Now you can say, was I profitable on the job for Diego? Because when you choose a customer, you can look at profitability by customer, which is really helpful, okay? Class, oh, okay, we did a landscape design for him. So I'm gonna go in, hopefully we have these all set up, but we're gonna choose landscaping or design or whatever we want to class of business. Now we know profitability for that class of business. So QuickBooks is amazing, but it's garbage in, garbage out. If you don't fill in the blanks, you're not going to get all the information you need. But when you do fill them in, magic happens. We get excited. So what NR did is she put all those transactions in, and I'll show you the end result of a lot of these things we're doing, but now we've gotten profitability for the company as a whole when we get all these things entered each month. Now we've got profitability by the class of our business because we've selected a class. And now we know how profitable each customer is, so we know if we charge enough. Does anybody have questions on that? No? Okay. Awesome. Okay, so for the purposes of bank fees, it's the same process for credit cards. The window looks the same. Everything is logging in is the same. Just use whatever your bank is, your credit card is, and you'd be able to go in each month. And the idea is that you go in and clear out the bank feeds and make sure everything has been entered for each of the banks or credit cards that you have. Okay, and then that should say, okay, all my transactions have been entered. We captured everything. We're ready for our next steps. Okay. So once you've gotten everything entered for your banks and your credit card, the next thing you're going to do is you're going to do a bank reconciliation. How many people are not familiar with bank reconciliation? Okay, couple, good. So we're gonna touch base on it so I can show you. So let's go in and actually do a reconciliation. There's a couple ways you can go in. You can go in through the accounting side, but also in the gear. When you go into the gear, that's where basically everything is. You can go in to reconcile there. So once you get in, go ahead and click get started. And let's do it. What you're gonna see is it's gonna say, okay, do you wanna reconcile an account? And it's gonna say, what account do you wanna reconcile? So the purpose of reconciling is whatever happens on your bank and credit card, we make sure that it has actually been recorded. You're basically just checking it off. So this transaction went through the bank, is it over here in QuickBooks? This transaction went through the bank, is it over here in QuickBooks? All we're doing is going through and just making sure that it actually is recorded in QuickBooks. So go ahead and just choose checking and put, I don't know, $7,500 for the end of May. So typically your bank would email you a bank statement or mail you a bank statement each month. And that's what you would use in order to do your reconciliation. But I mean, now we have access to our balances all the time. So you can log in at any time and make sure that you've recorded all your transactions. And we see this typically when a business is very cash tight and they want to see what's cleared and what hasn't. Have you ever heard the term, I thought I still had money left because I still had checks? That's not true. So when you do a bank reconciliation, this is saying, okay, what actually cleared the bank and what is my true balance with all the checks I've cut, even though people haven't cashed them, and things of that nature. So bank rec will help us with that. So we're gonna go ahead and click start reconciling. And essentially all it's gonna do is it's gonna say, here are all the transactions that you've recorded, all the checks you've cut, all the payments you said you've deposited. And so we wanna go through for the month and say what happened on the statement and what happened in QuickBooks and clear off the ones that are showing on the statement. If it's on the statement but not in your QuickBooks, you need to enter it because that means you're missing it and your bank or your credit card balance isn't accurate, okay? So what you would do is you would go through and we just mark it off on the bank statement. Yep, cleared that, cleared that, cleared that. At the end of the day, your difference up here should be 0. That means at the beginning of the month, my balance in my bank was 5,000. This is all on your bank statement or your credit statement. On the end of the month, my balance was 7,500, and all the transactions that occurred made my balance go up $2,500, and I cleared them all off, and my difference is 0. That means everything's been recorded. Yep, you got it. So you would just say whatever is on your paper document or on your bank online login, did that happen over here? I want to clear it off. Yep.
But if this is coming through the date, do you necessarily use the paper as well? Because it's already in there.
Great question. If you want to hope that technology works 100%, you can do that. But we always say that we still always want to check. An easy way to do it is really cool. So let's say that your books aren't a disaster and last month you cleared everything off and you feel like everything's been reported and it's right. That's cash basis, so remember that, right? So you still want to see if you're recording things on a full basis and they haven't necessarily cleared, they're going to show up here also too, right? But you can actually check this button right here and it will choose everything. And if the difference is 0, because you're on cash basis, you're good. So you would just be able to put that beginning and ending balance in and not go line by line. That happens once in a while. But it's always a good check system to do. It's a very good habit. And even when we do our tax returns, we say, did you reconcile your bank account? And we want to see that. And it's also just like a true picture of cash. We just want to make sure nothing was missed because bank feeds make mistakes, unfortunately. All right, questions on that?
So what happens when it's not?
So that means that either, there's a few things you check. Is my beginning balance the same as what my statement says? Yes or no? If it's not, why? Is my ending balance, did I enter it in right? If I did, okay, great. Did I think that I checked everything off, but maybe I was distracted and my wife yelled for me and I checked something off and I shouldn't have, and that's why it's off. So a lot of times,
Or you reconcile 6 months.
yeah, or there's that, or there's that. So it's usually one of those things. And so you would probably have to go back and restart your reconciliation and double check yourself. Like once you check your balances and they're all right, if it's still not matching up and saying a $0 difference, you probably either check something or didn't check something that should have been.
Yeah, or you're missing something.
Or you're still, and you're
Yeah,
still
still
missing
missing.
something, yeah.
I have a question.
Sure.
If I want to do the reconciling now, but the other person before me was not doing,
Yeah.
how can I do this if the value is completely different?
Oh, you go back and you reconcile with the ones they didn't.
Yeah, so the question was
Yep,
that
thank you.
if you're going in to reconcile, but the person before you has never reconciled, what are you supposed to do? So, and sometimes we'll even, depending on kind of that length of time, we'll do a reconciliation over a multiple month period. You don't have to go month by month. So if you had, say 3 months where you hadn't done it, you could just do it, as of the most recent month, but you would still have to get all, 3 of your previous statements.
Yeah.
Yeah.
Yep, you're welcome. We do that a lot.
It happens.
Yeah, a lot. Okay. All right, so I think that clears up, so you can do, like I said, you can do this for bank accounts, you can reconcile credit cards, which is important. And just so you know, because a lot of people don't know this, is when you go into a balance sheet, could you pull up a balance sheet for me? We call this tying it out. It's a really fancy way of saying, does it match what my statement says? And I think that this would be really helpful because a lot of people don't recognize that this is what it is. But if we were to take a balance sheet, and as of 5/31, we've now reconciled our bank accounts and our credit cards. Let's pretend it's May 31st. If you could just scroll down, but does this balance to my bank statement? And if not, that means you have unreconciled transactions, okay? The credit card, if you scroll down, there should be credit cards. Does my credit card match up to the balance that was on the statement? That usually should be, because usually when credit cards happen, that is usually within that same time period. So if not, there might just be a couple unreconciled transactions. And when you finish a bank reconciliation, it'll print a statement for you and tell you what things have not cleared yet. And that's why your cash or your credit card would be off. Okay.
Yeah, but so just as it's important to make sure that what happened on your statement is in your accounting records, really important to look at that reconciliation and see, of these things that didn't go through the statement, are these valid items?
Right.
Right. So if you've got a deposit in transit from 2-3+ months ago, that probably doesn't make a lot of sense, right? Your deposit should clear within, a few days. So really taking a careful eye to that and seeing the things that are not cleared, are those real?
Yep, exactly. Thank you for adding that. And so, when he says, are they not real? It's like, did I accidentally cut a check, the same check twice, or enter it twice in the system? Did I did I lose a check and thought I deposited it and I never did? Should I void this, or should I call the vendor and say, did you ever get this check? So those are the things you would ask yourself if there's things that are still uncleared. And that shows up on the report when you complete the reconciliation. Questions on that? Great. You guys still awake? Okay. So now we're going to move into getting the money, which is always the fun part. So we're going to go back up to the plus sign at the top, not the gear anymore. And we're going to go into an invoice. So a couple of things I want to highlight on the invoice is it has all the same sections that your expenses do. They have your customer name, your class of business, your location, all those things so that we can see those profitabilities by class, by location, by customer. And so what we're going to do is, again, garbage in, garbage out, filling in everything that you can. So we're going to choose good old Diego. And luckily it remembered, because we put Diego in before, it remembers what his email address is, it knows what his address is, it remembers what his terms are, so he has 30 days to pay us. And then the invoice date is whatever the date is, so it could be, the end of the month, it could be the day you're making it. You would just go ahead and change that to whatever the date's supposed to be, and it automatically tells Diego it's 30 days is the due date. And then the location over here, is there any options for location right now? Up at the above a little?
Oh, yep.
No, there's not. So location, let's just say Diego, we did a job for him in, Colombia. Perfect. And so now we would be able to see that profitability just for work done in Colombia. So your product and service, as I gave examples earlier, is like, okay, well, what did we do for Diego? So we did some design for him. So go ahead and put design in. And you can actually change your description to automatically show up. So if you want design on your customer's invoice to say design of landscape project, then you can go ahead and set that product or service up to default to that same custom name. And this product service column does not show up and does not need to show up on the invoice. It could just be the description. So you can set it up so you know what it is that you did, and then the custom naming comes up, and that's what shows up on the invoice. So we did it really cheap. We did it for 75 bucks. And then we did it as a class of business landscaping. Okay. So what's really great about this is if you do multiple products, then you can put over different classes of business. So if you're billing Diego for his landscape design, but you also mowed his lawn and you also did some fertilization that month, you're going to actually be able to get the different revenue to show up in each of those classes of business all on one invoice. Okay. Sure.
In in product, no sales. So we have a lot of sales of products. And the QuickBooks have support for one bar or no, just local
For the barcode? Yeah.
barcodes.
Yeah, no, yeah. I believe that you can set up to have an inventory app that syncs with it, that you would be able to use a barcode. Yes.
Because I have a big stock, so
Yeah.
the control of product is very,
Yeah.
very,
You
very
know,
complicated.
I actually can tell us that
Yeah, we can actually, offline or at the end, I will show you where you go on to do the app, and you can literally put in like inventory, and it will show you all the recommended apps to use for inventory.
Make I can block the manipulation of stock in QuickBooks, manual manipulations. So no.
For people to like take inventory.
Yes, the people know.
Yeah.
Just machine, just.
Yeah, so, there's usually like a user setup of what people have access to, and I'm sure that there's probably a setting in the app that will allow for you to have some blocks and some boundaries within it. Yep, and then it's always good as a side note to do a physical inventory.
Yeah.
So you're able to see if that's really happening or not, to see if it's, a real issue. Yeah. Yeah.
Just a general query really on invoicing. So you do an invoice and you send it out, and there's a query on that invoice, and maybe you need to make some sort of adjustment. Would you ever go back and adjust an invoice, or would you issue a new invoice?
Yeah.
Credit notes?
So the question is, can you adjust an invoice after you've written it?
Thank you.
Should you?
Yeah. So yes and no. So typically, if it's in the same month, the same time period, and we've caught it, and we haven't closed the books officially, and we don't say, okay, this is what our month was, and we lock it down, which I'll explain what locking it down is in a second. We would say, go ahead and you can update it if it's within that same month. And you can tell me if you disagree. But if it's after the month and somebody has said, you billed me wrong, we would typically do a credit memo. And we would give them a credit memo for the things that were changed or additions that we needed to add. Okay, you agree?
Yeah.
Okay. Good. And so when I said locking it down, a good practice, and it's in the advanced settings, is that when you close out a month and you've done all your reconciliations, you say, okay, I did all my invoices, I did all my reconciliations, I'm good for the month. Oh my gosh, there's literally 40 ducks crossing the street right now, and it is adorable. Oh my gosh.
Is that like something you're putting on the invoice? That's what I was thinking, ducks crossing the street.
Yeah, no, there is literally 40 ducks just running through the street right there. That is adorable. So you can go into the advanced settings. I do not have ADD, but that was very easy. But you can go in and say, close the book as of this time period. So let's say you've got 2 people in using your book. You can say, I finished the book and I don't want anyone to change anything. You can lock it and say, as of May 31st, no one can change anything. And then that way the financials are the financials.
Yep.
And you can put a passcode on it. So if anyone tries to change anything, it says, sorry, you can't, the books are closed, you need a password. And the key is don't give anyone the password.
Yeah, it's especially crucial, once you've finished a year and your tax return has been done, and, you really don't want to go back necessarily and do something that's going to affect those numbers. And I always, as an accountant, I always set the password to be like 5,000. I said, and I'll give it to them sometimes. I say, well, here's your password. It's 5,000. That's how much it costs if I have to go back and fix something that you changed.
Yeah, it's very true. We see it very often when we get the tax return for the next year and we say, what changed last year since we did the tax return? And they're like, oh, I don't know. I didn't change anything. And then we're like, you literally have to go dig and figure it out, especially if it's a big number.
You want to
All
cover?
right. So now we've got the invoice all created. We've got all the different product services put in. We're going to charge them $125. There's a lot of options with the invoicing, but if you click the down arrow where it says save and send, yes, you can save and new. You can go in and do the next one. You can save and close. You can save and share the link, which I believe is sharing the email to send right to the client. But you can actually go into each client and set up and put their email in there and say automatically email. There's options where they can pay you right through the invoice. So we have a lot of subscription clients that will send an invoice and they can just click to ACH pay them, or credit card pay them. So that's an option too, that when people get the invoice, they can immediately pay you. There is a fee for that though, yes.
So purchasing stuff online, like, you know, just have it set up with PayPal on the website.
Yeah.
Do they use Link or what?
So-
Twice here, you know what I'm saying?
Yeah, so there, you can link PayPal now to QuickBooks Online so that all your transactions will sync over. I think that would
Will
be,
they auto-populate on the?
it'll just be
As long
like
as I
bank
have to do
fees.
it once, I think.
Yeah. What was the last question?
Will it how does it record it? Like if I have a repeat customer, will it auto-populate? Or do I have to like upload or edit it?
Okay, so I think I understand what you're asking me. So if you have a customer that always pays you on PayPal, you can set up a recurring invoice and it'll match up. So if you wanted to say this client pays me $100 a month, you can set it up as a sales receipt and then it'll link up to the PayPal thing. Alternatively, if they're always being charged, don't set anything up and just have the PayPal thing come over. And it'll just link to the person's name that shows up in PayPal. It'll come over like a bank feed, so it'd be the same scenario. You go into the PayPal, you set it up like a sync in that same bank feed window, and it would say PayPal sync, and you would go in and make sure it gets classified. Correct me if I'm wrong, correct? On
Yes.
PayPal? Yep. So you might not even have to do invoicing if you have just recurring transactions. You could just have them come over and hit sales.
No.
It's not? Okay. Sorry, I thought that's what you said. So, if you have an invoice in or a sales receipt in, and it comes over and it's the same amount from the PayPal thing, it will recognize that it potentially has a match. Does that answer your question?
Yes, I mean, I have the same customer that I would do an order and the same thing, so
Gotcha.
and then I have customers who aren't.
So if you have the customer already in,
Yeah.
you can create an invoice or a sales receipt when you know that they purchased it. Or alternatively, you can have the customer name in your QuickBooks, and then PayPal has the customer name, and as long as they're matching up, then it would just go in and you would still have to book it for revenue. You wouldn't necessarily, if you didn't want to create an invoice for every single time, you would just book it to a revenue. And so if there's transaction fees or something that you have to book to offset it, you can actually go into the bank feeds and do split lines. So let's say, for example, someone bought something from you on PayPal for $50 and it cost you $5. So you're actually only getting $45 when the sync comes over. You would have to go in and go into the feed and say PayPal revenue $50, and then you'd have to go minus $5 for credit card charge. Okay, so if you didn't want to do an invoice for each one, you would just go into the PayPal feed and just go in and update. Does that help?
Yeah.
Okay. If you have any more questions, we can tackle it after. Okay, so again, you can go in and do a lot of invoicing customization, but you can have it emailed to them, they can pay you automatically. And once you hit save, it's now showing up as revenue on your income statement. Okay, if you're cash basis, it doesn't show up as income yet. If you're accrual basis, it does, because they didn't pay you yet. Okay, so let's go ahead and we're gonna go back up to the plus sign. You can go ahead and save and close that for me, that'd be great. We're gonna go to the plus sign and we're gonna, I think it's plus sign, receive a payment.
Mhm.
Okay, so now Diego is paying us and he's within his net 30, so he's a good customer. And we're gonna go ahead and just choose the payment date, just say, 6/15, and go ahead, yes, just pick a date that's after May 31st, please.
Or after mark.
Yeah, because the invoice was dated for today.
Actually, she did it on the first.
Okay. Any day, I don't care. Okay, so how did Diego pay? So you'll have your payment method. So when you set up in the list your payment methods, they'll show up here. So go ahead and click that down arrow for me, please, Henry, under payment method. And here you can say, did they pay me by cash, check? When you choose check, you can put in the actual check number in the reference, and then deposit too. So normally, all right, how many people don't know about undeposited funds? We have to touch base on that.
Crucial.
Couple, it's really crucial. Okay, I'm going to explain what undeposited funds is because it's such a hiccup for most people. So normally you would think, okay, I received in money and my deposit to is gonna say whatever bank account I'm gonna put it into. Undeposited funds is like when you get a check and then you put a pile of 10 checks on your desk and then you put it in the bank. Undeposited funds is all of those 10 checks listed separately. But then you can actually make a deposit in for the full amount. So when the bank fee, so say you have 10 checks for $1,000 each. When the bank fee comes over, it says you got 10 grand. If you just put each individual receipt in and directly hit the bank, you're gonna have $1,000, $1,000, $1,000 hitting your bank, and the bank fee is gonna see 10,000, and it's never gonna connect the two. So when you use undeposited funds, it gives you the option to then take the next step and hit make deposits and put them all in as one deposit for the amount that you actually did. Okay? Did I lose you? Kind of. I'm gonna show you. Okay, I will show you. So let's just say Diego pays us, he pays us $125, we put it to undeposited funds. Normally, we would have, a lot of times people will say deposit to Bank of America. It now goes into our bank reconciliation and says we put $125 into Bank of America. Okay. Let's say though we got 5 checks and we deposit them all together. We don't have a deposit for 125 anymore. We now have a deposit for the total of all 5 checks. So when you go on the plus sign and click bank deposit, it's going to show you that you've got these payments that you received sitting in there. So you can say, I received in Cool Care, Diego, and Freeman for all these amounts. So my deposit was actually the total of these 3 checks. Did I bring you back around? Yeah. So now when your bank fee comes through, it recognizes the bulk deposit and it's not confused because you did a deposit for each one separately.
Right. Because thinking about it operationally, once you get your bank statement at the end of the month, it's going to show $2,187 as the line item, right? And so when you're actually going to reconcile, that's the number you'll be looking for. So you'll need that batch.
Good. Do we have any questions online?
No.
Okay. Okay. So that is how you receive it in. So go ahead and just save and close that.
Do you want to go over aging?
Yep, just save and close that first.
Okay.
Yep. There should be enough. Okay, so another step on this is, okay, so now we've invoiced everybody, we've received all our payments, and we made all our deposits. A really good report to use to see who still owes you is in the report section. So I like to just jump over to here real quick and show you, you can go ahead and just do the accounts receivable aging summary in our, at the very top. It's right at the very top. Yep, go ahead and click on that. And so you can go in and see at any time who owes you. So when someone's overdue to pay you, you should be able to go in and say, who do I need to make a collection call to? Okay, so if you've reconciled all your bank accounts and you know who's you've deposited money from, you know who's paid you electronically, you've got everything recorded in, you should be able to pull up this aging summary, but there's also like customer balance reports and open invoice reports, detailed aging. There's a lot of different options. So you can even see like the open invoice or collections report will actually say the customer's name, their phone number, and their email if you wanted to. There's a lot of different options for that, but this will tell you who owes you, who's overdue. And so you'll be able to see at any time who do I need to call and get paid from.
Yeah. So this is generated by the invoices that you've written to your clients and just an illustration of why it's so important to fill in all the boxes and get all that information there. Because if you didn't write Amy's Bird Sanctuary and put May 1st on there, you're not going to know that line item. So it's just really important to get all that on your invoice.
And the terms are correct too, because it might say it's overdue and then you put on that it was due on receipt and it was really net 30. And so they're like, well, it's not overdue yet because I only pay on net 30. So it's important, again, garbage in, garbage out. All right. Okay, so let's go in now that we've done that. And let's talk about making some deposits that are not related to a customer. So we'll touch base briefly on that. So that generally is when you get a refund of insurance. Or when you went to Lowe's and you bought some supplies and you return them and they put it back on your card. These are deposits that are not related to your customer and just go into a make deposit window. So if you go into just a bank deposit, there may be still some, okay, so normally when you go into this, if there's undeposited funds, they'll be at the top of the screen. But then below it, you're gonna have this add, can you just close that one second? It'll say add funds to this deposit, and it's gonna say receipt from. So let's say, is there an insurance company in there maybe we could use? That's not a customer, maybe, but yeah. Let's do Elliott Davis. We like him. Well, Elliott Davis is gonna give you back some money. Okay, so Elliott Davis actually received too much money from you, so they're giving money back. I don't think that ever happens, but, and so we would put in like professional fees. And so what that means is you had originally written them a check for $1,000, but overpaid them. So your professional fees originally said $1,000, but when you get money back, it's actually less professional fees expense, right? So we would go ahead and put that into the professional fees expense, put a memo of refund, how they paid you, so check or American Express, put it back on your card for you, whatever it may be. And then, perfect. And then the amount, we'll just do $500. And then the class of business, usually it's typically overhead, so it may not be a class, or we might have an overhead class. But that's where you would put your class. Okay, questions on that? Great. Okay, vendor bills. Ugh, we always wait to pay these. Wait to pay these. All right, so we're gonna go back in the plus sign, and now we're gonna go in and say, okay, we've got all our money that came in, and now we're gonna go pay all our bills. So you're gonna go in the plus sign, and you're gonna do enter a bill.
I have a question. So
Sure.
back to the professional fees, bank deposits, you're just adding those in because they're not on the bank statement?
So her question is, why are we just adding the bank deposits in that are not customer related? So yeah, so you got in a check, and normally we would have done that receipt payment window, but you still have to go in and make a deposit. Alternatively, you could wait till it comes through the bank, and you could just notate it as professional fees within the bank fees. But if you wanted to go in and make a deposit ahead of time and get your cash in on a daily basis and know where your cash is, right? You could go in and put in the deposit and put it in there so that it did show up when that bank fee came through. Okay. All right, so entering a bill, I always like to do the Elliott Davis gives you a bill because we like to have clients. So Elliott Davis, and if you had used them before, you probably set up what our vendor address is so that you would be able to, it would auto-generate when the bill came in. The terms, we'll just say due on receipt, because that's what our terms usually are, and whatever the bill is. So this is really important too, that when your bill comes in, the day that's stated on the bill is the day that goes on your entry in QuickBooks, right? So you don't want to say get a bill, and a lot of times it takes a while to get in the mail. You want to put it the date that they actually issued the bill, and then the due date and the terms need to be set up. And once you get the terms set up for a vendor, they generally don't change. So it'll auto-populate for you. But then that way, we're going to do the same thing. We're going to have an aging report that I'll show you. You can see when bills are overdue by making sure you put in the correct bill date and due date. So the bill number is going to be whatever the invoice number is on your invoice. Location is, if that is specific for a location. And then category is going to be whatever type of expenses. So if it's, you know, professional fees or accounting or whatever it may be, rent expense, utilities, whatever comes in. Description, if you wanted to put in what you had done, you could do that. And then the amount, and now it's going big with 1,000. And then the customer. So if it's specific for a customer, so let's say you purchased materials and it was specific for Diego, you would go ahead and put Diego in there so that you could see the cost of doing the job for Diego. The billable line item is if this is an expense you're going to bill back to a customer. So let's say you outsourced some landscaping design and you wanted that to come over so you could bill it for Diego. This is a little bit more in depth. We'll talk about this in part 2. But you could mark it as billable, and there'd be a section that says, what are expenses you received that need to be billed back for a client? And you'd be able to select them so you make sure to bill them back. And then the class of business, like this is overhead, but other classes of business would be the landscaping and the lawn care, et cetera. All right, so we'll go ahead and save and close that. So typically to pay a bill is usually pay by credit card or you cut a check. I'll show you how to cut a check. I'll also show you how to pay it by credit card to record it. And so go ahead and go to pay bills. So we'll go back into that Elliott Davis. So these are all the bills you owe right now. And see where it says payment account at the top? That's going to tell you if you wanted to choose like a credit card that you paid it with, if you want to pay it with your checking account, your savings account. So you can go ahead and just choose that so it shows up in the correct credit card or bank account that you use. And then what day you paid it. So if you paid it on a credit card, you paid it today, you can go ahead and do that and record it. If you wanted to, you know, put a payment date of next week and send the check out, you could also do that. And then whatever the check number is, you would go ahead. And then to print it, you could click print later, or you could alternatively just print it immediately. But you could do a print later, and then after you paid all your bills, you could print all of them at one time. So there's a window that would be able to print all of the checks at one time. So we'll go ahead and we'll click on Elliott Davis. So usually what would happen is we wouldn't do it this fast, right? We'd probably put in like 10 bills, and then we would pay them like a week later or 2 weeks later. So right now it like doesn't make sense to like enter the bill and pay the bill so quickly. But normally we would have a bunch of bills that we entered, and then like a week or 2 we'd go in and say, who do we want to pay? And we would pay them. So we're going to pay Elliott Davis, and you can either choose to save and print, or the down arrow, save and close. So we can do a print later. But just notice too that you could also not pay us the whole amount. So you could change how much you wanted to pay if you wanted to pay a partial. Also, if there was any credits available, it would show up there. So it would reduce the amount. You could apply a credit to it. So if a vendor gives you a credit for a return that you had to use on your account, that would appear there when you entered it.
Could you just click it?
It should automatically show up that there's a credit, and then you would be able to just do less of a payment.
And if I do the pay in this part, don't you be on the banking later?
Correct. Yep. So it will show up as cash out. So her question was, so I can remember to do that. Her question was, if we do this part where we pay the bill, will it show up on the bank feed and the bank transactions? And the answer is yes. And then also when the bank feed comes through, it should match up when it gets cashed. All right, so go ahead, and what'll happen is, so what Anar's doing is a really great example, is she's saying, well, we're only gonna pay $500. So when I show you the aging schedule here in a second, it's gonna show you that we still owe Elliott Davis $500 because we had only paid them $500. So go ahead and save and print that for me.
Janelle, how many maybe saw that to actually pay the bills? Do you set a date, show credit card billing?
So I think, so typically it's never been when you click to pay it, it actually paid it for you. But actually in either the Plus or Advanced, I believe that now they have an option to do like 20 bill pays where you can actually do it through QuickBooks for a fee. So that just recently got added, right? Yeah. But before it was like people thought that they were actually paying their bills when they clicked pay bill, but that's not the case. You actually were having to like send the check out. But now you can set it up and you can pay bills automatically. I think it's just like linked vendors. So vendors that accept payments through QuickBooks, you would be able to pay, I believe. Okay, so when this is making you set up the check type. Well, once you got your check type set up, like do you have a voucher style of check or something else? Once you got through that, you would go into here and it would say the checks you have to print, and you can choose the print to select.
So now, part of the QuickBooks, so instead of PayPal, you have the QuickBooks logo on the website?
I believe so. Yep, because there should be a link. I believe when you turn on ACH and a credit card, which you'd have to get approval to accept credit cards through QuickBooks. QuickBooks will give you an approval. It's just like having another merchant. QuickBooks is doing credit card merchant. But the ACH, you would be able to set up, and I believe there's a link that is embedded that you would probably be able to use on your website. Yeah. Google is always my best friend. So I think if you Googled it, you'd probably be able to say embedded link, and you'd probably be able to find your link once you set up to turn on ACH or credit card. Yep. And alternatively, they can click on your invoice too. Yeah. Okay, where was I going with that? Go to the AP aging for me. So AP is very similar to the AR aging. So you can go in and say, who do I owe at any time? And so right now, luckily, we don't owe too many people, but as you can see, Elliott Davis shows up that we still owe them $500. We owe some lumber, we owe an insurance agent. And so you'd be able to go in and say, okay, these are who I have to pay. Who should I pay? Who's overdue? Who do I need to pay? That kind of thing. All right. Questions on that? Moving right along. All right, so we've received in all of our bills, or all of our invoices, our customer payments, everybody's paid us, we're all happy, sitting on lots of cash. And we paid all of our bills and nobody's knocking on our doors. And so now we actually have usable financials, hopefully, that are gonna help us to make some decisions. So Nick already touched base on a profit and loss and a balance sheet and a statement of cash flows, but I'm gonna go through one by one and show you a couple of things. So we're gonna take a look at the income statement first. So the income statement can be manipulated a lot of ways in QuickBooks. So if you could scroll for me, Anar, you can change the period. So if you wanna look just at May and see your profitability just for May, you can do that. If you want to pull up a report from January to May and see how your profit's been, you can do that. If you want to change it from last May to this May, you can do that. You can also do comparison periods. So if you want to look at, let's do this. Let's look at May and then do a compare another period for me. Can you close out of that? Just click off of it. And
there, I'll just go back.
Yeah. Compare another period, right in the center. Right here. Yeah, I'm pointing like you're looking at it. And you could just do let's see, the previous year. Okay, and then go ahead and just run the report for that.
Change.
No, just run report. Okay, so there's no information there, so it's very
Just started
helpful.
business.
But yeah, what you'd be able to see is if you've been in business for a long period of time, you could say, okay, how did I do last May compared to this May? It's really helpful, especially like seasonality too, right? So if you know you're normally busy in May, you want to do a comparison. You wouldn't want to compare May for a landscaping company to December because it might not be as busy, right? I'm thinking of my landscaping company in Pennsylvania. They did snow plowing in their slow months just so that they had another class of business so that they could fill in that loss of revenue time. But this is a way for you to do comparisons, like how did I do last May? How did I do this May? You can do comparisons of this year to last year for the full year, lots of different things. But as you can see, let's go ahead and scroll down a little bit. As you can see, they're actually doing a cost of goods sold. So they have all their income items, and then they have job materials under cost of goods sold. They have installation labor. They have products income, pest control services, cost of goods sold. It's not the most beautiful chart of accounts, I'm not gonna lie, but the idea is now you're able to see the income, the revenue, less the exact costs to do the job. So it doesn't mean the rents or the utilities or anything like that to run your business, but it means how much actually did that company make off of just the product and the installation and the labor that we had to put into it. Then below the line, we generally have our administrative costs and our facilities costs and things, all the overhead. So what's really great about this is if you can see your gross profit margin, which is the income less the cost of goods sold, and we'll get too in depth about it, but you're able to see like what is a normal profit margin? Do I normally make 20% or 80% or 50% on all the jobs I do? And so if I do, how many sales would I have to make in order to cover all my overhead costs? So that's how we start to utilize a more robust chart of accounts versus just the vertical income statement. Questions on an income statement? Instead of one other thing, could you go in for me and scroll up to customize, and for the compare another period, change it to nothing? No, go back off there, please.
I like this stuff.
Yeah, you do like this stuff. Okay, so scroll up and do compare another period and get rid of the previous year and the previous period. Unclick. Unclick previous period.
Oh, unclick.
And then display columns by over on the left. Right here.
Oh,
Display columns by and do class. Right here. And run. Okay, so here we set up, as we were going along, we've set up a couple of our classes of business. So it has admin, garden, landscaping, not specified, which means those are all the transactions that they entered that haven't been to a class yet. But as you can see, you're gonna now be able to see what was my revenue just from each of those types of businesses, and then what were my expenses applicable to all those different types of businesses. And then when you get to the bottom line, if you've coded everything to a class, you're gonna be able to see what your profit is on those classes of business, which can be really helpful. Okay. You can also do the same as a profit and loss by a customer. So instead of choosing the display columns by class, you can display a column by customer, and you'd be able to see your profitability for each of the customers. Okay. All right, let's go to a balance sheet, which we touched on a little bit already. So balance sheet is, like Nick said, a snapshot in time. So this means where were all of your assets and your debts at the time of the report. So like an income statement is more of a period of time. A balance sheet is just where is it at as of this day. So what is my bank balance as of today? What do I owe in my loans as of today? And what is the value of my company? So if you scroll down a little bit for me, you're gonna see that all of my assets are worth $22,000. So I've got a truck, I've got a little bit of inventory, I got some people that owe me. And then if you scroll down a little bit more, you've got your liability. So you owe some vendors about $2,100, you have a little balance on your credit card, and you have a small loan, and then you have also a bigger loan of $25,000. And so when you do the assets, which was $22,000, and you take out the liabilities, which is $31,000, that means your company is worth negative $6,000. So the idea is you always want to have more assets than you do liability, typically 1-to-1. So a healthy balance sheet would have more assets than liabilities. Okay, because that would mean you would have net value, net worth. All right. Same goes for personal net worth. So when you scroll all the way down, your equity value is down at the bottom. So it's just the difference between the two. Did I say 6,000? I don't know accounting, it's 9,000. Oh, there's some opening balance equity in there too.
We have calculators for that kind of stuff.
Yeah, yeah. Not using my fingers. And so that's kind of what the balance sheet is. Okay. Okay, so statement of cash flows. The most unused, most confusing, most useful tool. And so as Nick explained, a lot of people are like, well, if I made money, where did that go? I had this client once, I always like to tell real stories. I had this client once, he made a lot of money. And every year he would say, what do you mean I made $1 million? That's not sitting in the bank. And I was like, well, let's go look at all the distributions you took out. Let's see, you bought a 4-wheeler, you bought that timeshare when you were in Punta Cana. Oh, that's right. You also got that car for your daughter. And he'd be like, oh. So that's what a statement of cash flow tells you, is like when you have net income, but you spent cash on things that don't hit the income or expense lines in your business. That's essentially what this is going to tell you. So this is saying, where did my cash go? So it starts with the net income for whatever the period of time is. So for this particular instance, we're using May. But it's where did you spend your money on things that are from the balance sheet, changes on the balance sheet. So that's what your cash flow was for the month of May. So if you wanted to scroll down, you'll see that there's operating, like Nick said, there's financing. So you got a loan, you got 25 grand. Your net income was only 70 bucks or a loss of 70 bucks, but your cash was actually up 25 grand because you got a loan. So you had more cash. It felt like you were doing really well. Your profit was only negative 70 bucks, but you only had cash because you got a loan, right? So your net income is only just how the business is doing. It's not necessarily the feeling of cash. And that's the thing. It goes both ways. When your net income's not doing good, but you have cash, it may feel like your business is doing good, but it's coming from other sources, right? If your business is doing really good, but you're spending a lot of money to pay back a lot of debt, it may feel like you have no money, but your profit may say that you're making money, okay? So that's what the statement of cash flow tells us. Questions on that? You guys awake?
Can you use QuickBooks for forecasting and budgeting? So forecasting cash flow?
So, great question. So
Question
the question
is-
was,
okay, there you go.
thanks, Nick. I'm getting good. It's been 2 hours. I'm finally figuring out there's people on that computer. So the question was, can you use QuickBooks for forecasting and budgeting? Budgeting, yes, 100%. Forecasting, you can actually utilize apps. There's apps called, I think, Frog, and there's a couple of different ones that'll pull the data from your QuickBooks, and it'll help you to create a forecast. But a forecast is always, you still have to put the assumptions within it. But there are apps that will pull the data to help you to build a forecast. The budget, you can always put a budget in. You can do budget to actual in QuickBooks. And it'll pull in the current actual data plus compare it to budget, and you can pull up reports. Yep. You guys are all familiar with the difference between a budget and a forecast? No? Yes? So budget is like, how much money am I going to be spending? And putting in your expense line items, your income line items, and saying, okay, did I stick to what my budget was going to be, right, for my profit and loss? Cash flow forecast is kind of like a statement of cash flows. It's like, how much cash am I anticipating having? So it's looking at saying, well, is my profitability, my revenue, my expenses going to be? And then what are the debts I'm going to have to pay? And what are all those things am I going to be taking in loans and things of that nature? And what's the cash going to look like? So we can anticipate if there's going to be a cash crunch. That's the difference for those two. Okay. All right. So I think we've covered a lot today. We usually try to keep trainings to 2 hours on these things so that you guys aren't overwhelmed. We've covered a lot. This is the basis of, getting good financials and a great first step to helping you to really take a step out of running a business and like saying, how do I look at what's really happening just on my financials? A lot of people think that they use financials just to get a tax return done, and that's not the case. Tax returns required, but financials really can tell you a good picture about how your business is doing and how you're going to grow. And so it really is a really important thing to either learn how to do or get an accountant to help you to understand what's happening and getting a full picture. All right. So part 2 is on June 12th, same place. And in part 2, we're going to be talking much deeper about sales tax, payroll processing, job costing, contracting, those sort of things. So if you're utilizing those in your QuickBooks Online and you want a more in-depth look at any of those areas, that'll be on June 12th. Okay, so housekeeping items. I do have a container in the back. I'll pass it around. If you want to write your name on a piece of paper or drop up a business card, I have a Starbucks gift card I want to give away. And I also want to open it up while we're doing that for any last minute questions. All right.
Now I know why we have an accountant to do everything.
Yes, it is a lot. It is a lot. Most people go into business because they like the business they're doing, not because they want to do accounting.
I think it's really important to have, sometimes a third party that's looking at things for you. I always say that, you as a business owner, your business is like a jar, right? And you're inside your jar. You can't read the label that's on the outside. And it's really helpful to have someone looking in for you, to tell you what that looks like. So that's what I was thinking about.
Yeah.
Do you do one-on-one
Trainings?
Yep. Cause this is great, but not having it in front of me and moving around in it.
Yeah.
Yeah.
So normally we would say like bring in some real stuff and let's spend a couple of hours together. And really just like, let's say, what are you having trouble with? And we'll kind of do some real world examples right in your book. That's
Okay.
typically how we do it.
So how do we contact people?
I have business cards right here, but there's business cards at the back as
I
well.
have one of those.
Yeah.
Which one do you use then?
My direct line is right on there, or my email, just reach out and any of us can spend some time with you. Yep, should be coming around. Oh, you got it? Okay. All right, here, everybody's got their names in? Yeah, all right, you wanna?
You would use.
Yeah, you can just put your name in. We'll know it's you though. Anybody else have any other questions?
I didn't hear the whole thing. You do evaluations, like, so my accountant doesn't do that, but he's very reliable, we've had him for many years, but he doesn't do that.
Yeah.
And I'd like to be able to bring that message, to say, like,
You can
hey,
actually.
look, I know
give
this much, I did this, but I need this corrected.
That's one of the really.
Over the years, he has done a little bit of stuff, but, because he doesn't do the kind of like sit down with me.
Yeah, so it's very typical. A lot of times there's a lot of compliance firms that will handle like your taxes and they'll say, okay, they know something's not right, we would do some journal entries and clean it up for you at the year end. But yeah, so typically a typical week for all of us, we work in the accounting advisory area. And so what we do is just this all day long, where we say, you know, is your bookkeeping accurate, timely, and is it you're giving you the right information that you need? And then from there, we take a bigger look and we take a step back and say, okay, is it doing what you think it's going to be doing to meet your goals? Is it comparative to other companies similar to yours? Is your cost too high? Are you charging enough? Are you comparable to your industry? And really just setting up decision-making and goals. So like, where do you want to be in a year or 3 years or 5 years? And using your financials to make those decisions. That's what we do all day long. And so if you wanted to do like a cleanup and say, okay, I know something's not right in my book, I need to take a look at it, we'll do a cleanup for you. And then and then when we're done, say, okay, this is what's wrong in those books, and this is how you need to fix it so it doesn't keep happening. This is what we see that you're doing. And a lot of times when you're just doing it and you take it as a tax return, it's actually, your tax preparer does not have to clean anything up. When you put your tax return and get it done and you sign off on it, you say, this is what I told them was to be put on my tax return. And that's what he did. And there's no liability to your tax preparer if your income statement's not right.
They have a professional responsibility to ask you if there's something that looks funky to them,
Yeah.
or they have an inclination that something may be wrong, but aside from that, they have no liability.
Yeah.
And I have, like, multiple clients, so how do you do that in QuickBooks? You have to buy it per each business
Yes. Yep, especially because they all have different EINs and they all have different reporting, you would have a different client for each, or different QuickBooks for each, yeah.
Had a good question about who could use the QuickBooks and would it be good for an independent contractor? And so really depending on your business and what you do and how many users you may need and what other kind of functions, one of those levels of online that we showed will be helpful to you. The other thing that's really nice about online is when it comes time for tax time, you can actually invite your accountant as an accountant user. So they'll be able to go in and poke around and pull out whatever they need. Yep. There's a really nice feature where they can actually, if they see a transaction they have a question about, they can tag it. You'll get an email that you can respond to. Oh yeah, that was for this landscaping job, or whatever it might be.
But the chart of accounts would have to be the same, right?
No.
Yes, like when we go into QuickBooks Online, we probably see, dozens and dozens of different clients. They're all set up in different ways. They're actually all on different levels of QuickBooks Online. So I might have a client I go into and they're in the lowest, the simple start, or later in the afternoon, I'll work on someone who's advanced. We have access to all those in the account.
And I believe they're gonna send out the PowerPoint that we made, which we didn't really utilize too much today because we were in QuickBooks, but they're gonna send out the PowerPoint, so it'll have the web for the choices of your QuickBooks, and it'll have each step for you. So whatever you learned today will also be in a PowerPoint that they should be able to get out to you as long as they have your contact info.
we'll send out, we've recorded all of this today, so we'll send out a webinar as well.
Great.
Yes, are there any specific browser requirements for using QuickBooks? I've never used it before. I know she has Google on there.
Yeah, there's not a requirement.
We just find.
We find that Chrome is usually the best. Firefox are probably the two better ones to use it. Because you can actually, we didn't show it, but you can actually like duplicate windows or tabs. So if you were working on an invoice but also wanted to run your balance sheet at the same time, you could actually have those open in two different windows. So Internet Explorer just isn't as good.
Yep.
In general.
Yeah, we generally open in Chrome. Yeah. That's it.
The
Alright.
only other thing I wanted to just add in, so we've got QuickBooks, the more advanced one coming up in a couple of weeks. There's obviously been a lot to take in today. Go and play with it. So if you really want to get value from these guys' time, come on to the second one, but just play with the system non-stop. Come along with a list of issues. You can send them to us ahead of time so we can be ready to answer questions. And that's where you can get really true value from using it on a day-to-day basis.
Yeah, we'd love to touch on things that you guys really would like us to touch on. We'd be happy to help with that. And if you have our contact info, you can reach out and we'd be happy. We can pretty much do it with our eyes closed. So we'd be happy to walk you through something. Yes. All right. So here you go. All right. Okay, if there's no other questions, that's all I got for today. Hopefully we'll see you guys in a couple weeks.
So they say when to sign up for it?
Yep, so they should have a link for the same. Yep.
Thank you.
So, yeah, so typically,
It's okay.
it's like an hourly
Stop
rate, so,
recording?
like one